Welcome back to Market on Close. I'm Marley Caden. Software company MNDY.com has a case of the Mondays today, falling to new 52-week lows, down close to 30% after the close, after its latest earnings report. To walk us through the overlooked stock, let's welcome in George Tsilis, our senior markets correspondent. George, pardon my puns about it, a case of the Mondays here, but on a positive report, what was underwhelming?
Well, I think what you mentioned just a moment ago, the pun, it's very fitting for Monday, which is having a very, very poor Monday, to say the least. And I think there's a lot going on with the company. First off, if you look at their underlying business, it's essentially an application or collaborative work management and application development software company. They basically have the building blocks to build software applications and, of course, work management and productivity tools. And you think about artificial intelligence, either artificial intelligence may be taking some of the work away from companies like Monday and other competitors like Appian or even Atlassian or Simple Team, which we've talked about. And that might be something that the company is indicating when they talked about their challenges, irrespective of the fact that they did post some really good results from an EPS and revenue standpoint. The company increased their EPS $1.09. They beat the estimates, which were 86 cents. So that's a meaningful increase compared to the underlying estimates for adjusted earnings. And then if you look at their sales, they beat it around $5 million, $299 million versus the $294 million estimate. That was higher by close to 28% year over year. But if you look at the conservative outlook, that seems to be the challenge here, because they even talked about next quarter. Albeit, they posted $299 million this quarter. They're still expecting sequential growth next quarter between $311 and $313 million. But the challenge is that the range is actually widened out on the downside, because analysts had the downside estimates to be $313 million, and now it's the high side estimate, and it's just a fraction. I mean, we're talking a couple $1 million on a $300 million base. It's less than 1%. But the other thing is their fiscal year guidance for earnings also came in just slightly lower than estimates by about $3 million to $1.226 million or billion dollars for the full year versus 1.229 estimated. That's just a fractional miss. But nonetheless, because that change was about $3.5 million, that was not very much, considering the company did beat for the quarter by $5 million. So with that said, the algorithms that are trading the stock first will sell first and ask questions later. And I think the questions later are what's challenging Monday and its revenue guidance, which is slightly less than previously estimated, irrespective of the fact that it's still higher year over year. They talked about artificial intelligence searches. In other words, the results for searches that Google is producing are generated using AI, and that may restrict or lessen the volume of traffic that actually goes to Monday's website for those looking for CRM applications to enhance their productivity. So it's almost as if they're saying that the productivity enhancing tools of AI that Google's providing, when you go to click on certain items to search and learn from, are actually causing traffic to lessen to their website. But that was enough, I think, for the stock to sell off quite conservatively, by the way, irrespective of the fact that it came in ahead of both the EPS and sales for the quarter.
It is interesting to see yet another company mentioning the change to Google's algorithm and the use of this AI overview. We saw the same thing with Reddit and even a few other companies saying, they have concerns. Reddit, fortunately, didn't reveal much damage or show really any damage from the change to the algorithm, but they were upfront and said fewer people are clicking.
Yes, I think this is actually a very interesting case, because it does make sense. And I'm just, from a personal standpoint, when I do Google searches now, AI publishes in many cases the results I need. So it's happening now. How that affects the downstream click business is going to be another aspect that we have to consider going forward. I did notice companies like GoDaddy. I mean, this is a completely separate company, but they provide website domain hosting, and their stock has been down the last 2 quarters after a tremendous run over the last few years. So I think there's some element to the challenges that artificial intelligence publication results are creating for downstream website traffic. But nonetheless, if you do look at Monday's mention of what's happening, they do say that the volume of clicks to their website may be going down. However, they still see optimism because the qualitative clicks are those who are looking for their services to purchase. So the total volume or the quantity of clicks may be down, but the qualitative clicks, they say, are still there. And with that said, because of the conservative guidance, some of the analysts at KeyBank still have essentially a buy rating on the stock, a quite high one, considering the price action today at $330, but they did reduce their target from 385.
Well, George, we appreciate you being with us to break down MNDY.com and their sad case of the Mondays today and for putting up with my puns. Thanks, George.